think let's start with the positive trade that we saw in the market last week. We haven't seen a market post 5 days of gains for some time now. Do you think this is a 2011 low that we're sitting at now and there's upside potential from here? Or is it all dependent really on what takes place on the global markets as we see concerns about the shilling going forward, given the demand for exports could weaken further this year?
Thank you for having me, Samantha. That's an interesting question. Looking at the market, at the current position it's at right now, we had it gain marginally last week. I think this will be more of a phase than a sustained trend, because we still have a myriad of factors that come into play that may hinder such a progression. Number one being currency inflation. We had a central bank last week make some moves through the Monetary Policy Committee to raise the central bank rate by 75 basis points. This indeed has played to a positive advantage. We also have a number of other factors like political risk, which as we move closer to the latter part of this year and early next year may affect the market.
Let's take a look at what's taking place at CMC and how it's likely to affect issues of corporate governance on the bourse. That stock's now been suspended for 7 days by the CMA in order to allow management to resolve outstanding issues and look into investigate potential fraud at board level. But do you think this could mark the tipping point when it comes to issues of transparency and accountability in Kenya for listed companies?
Well, it's really a pity that the company is going through what it is. It's a really stable company. They've been around for quite a number of years. They have a stronghold in the spare part industry. And looking at the fundamentals, they're really good and they're really strong. So it's really a shame that any boardroom wrangles may affect the company. But in terms of accountability, I think we are already a step ahead. With the new constitution, we've made remarkable gains, and I think this should be more of a passing cloud than anything to set back the company.
How would you rate progress in Kenya when it comes to enhancing corporate governance for listed companies? How would you rate it against more developed markets like South Africa, for example?
Development is a relative concept, but I would say that we have made substantial gains, especially considering we have made major steps since we ushered in our new constitution. That was last year, and also looking at the economics of the country, looking at the market situation with the East African community. We've had Kenya as a friendly place to do business in. It's been a friendly place for multinationals. It's been a friendly place for the private sector. So I think we are making substantial steps, baby steps, but we're still moving forward.
And the CMA has now come out saying they're looking to make guidelines on corporate governance legally enforceable. Do you think investors are likely to be drawn into trade on the NSE, given the more aggressive tone that has been set by the CMA here?
Indeed, especially in a country like ours where investors are moved more by perception and moved more by hearsay than technical analysis and studies. People like to hear that there's transparency. If you recall, about 2 years ago, we had many investment banks crumble. We had many brokerage firms collapsing, all because of poor corporate governance. We had poor management. We had fraud. So CMA is doing its part, and I think it's a really welcome move for them to come in and ensure that the investors have a peace of mind when they come to investing in the stock market.
What is your position on the market at this stage, and how are you positioning your portfolio? You say we perhaps haven't hit a bottom, and last week was a temporary upside for the market. How are you positioning your portfolio at this stage?
Well, I've been taking a buy stance for the past couple of months, and I think I'll remain there for a while. I'm looking at the market as being at the trough level of the curve. So I think it's a time to buy in general. And I'm looking particularly at the financial sector because it's the strongest sector when it comes to shareholder value. And I would continue bulking up on the stocks which I think have that potential, and that is the commercial banks.
Which commercial banks in particular?
Well, for one, we know we are waiting for their third quarter results, which should be out in a couple of months. I would pick Barclays Bank, trading at a very discounted PE. Looking at the dividend yield, which I think is important, especially now at a time where capital gains may not be the way to go. I think Barclays Bank has a high dividend yield. One may look to get into it for that. I also look at likes of KCB, which have been fairly consistent in terms of price progression. And well, if I was to move out of the sector, I would go back to the energy sector. And I think my best there remains Kenyan Cobble.
You talk about dividend yields and the importance of dividend yields in light of the fact that most stocks have been under pressure for most of 2011, apart from the likes of KCB and Barclays Bank. Which stocks outside of the banking sector offer high dividend yields and attractive yields today?
Well, we have KCB, there's Barclays, as I mentioned, and we have some of the insurance companies like CMC Holdings. We also have a number of banks. We've had Diamond Trust Bank, Kenya Limited. We've had the NIC Bank, who have given bonuses. And bonuses, in a way, are a form of shareholder value, because you could always cash in on the extra shares, and you could always decide to keep them again in the event they earn dividend gains. So all in all, I think most banks have given back in terms of shareholder value, and most of them have a dividend yield of about 5% and above, which is fairly good.